Welcome into the channel. Paramay Trades. This is Paramay's Trade Journal. This is my personal market speculating journal for futures commodities. And today we're going to look at commercial interest, the CoT Report, Friday Roundup edition. Something we do every Friday. We download our information from bar charts. We import it into this report. Take a look, see if we can align ourselves in the upcoming week with the profitable side of the trades. And as a leading indicator, just look to see if commercial interest can help us out with market sentiment. You know, where's price action going? So let's just dive right into it. For those of you who don't know, we picked up this index from Larry Williams, Trade Stocks and Commodities with the Insiders. And we had a full literature on this, on how to create the index and how to use it and what to look for. So that's what we're modeling after, and this is the leading indicator that we're using to help us align ourselves with the trade. So we've got two indexes working for us. We've got a 6-month index with a 5-week prior index number and a 3-year index with a 5-week prior column. What this does is just helps us to look and see where the sentiment has shifted from the perspective of commercial interest, to see if we can drill down, take a look at the shifting commercial interest to see if we want to align ourselves with them, with big money. All right, so the data is in the raw. Anything over 80% is considered an extremely positive outlook. Anything below 20% is considered bearish territory or a negative outlook. So we haven't adjusted the numbers. We typically want to see an index that's at 100, but what we've been doing for the last several weeks is just keeping the numbers there during this time of market volatility to really weigh in the extremes and see the shift in sentiment that's been happening with the dramatic sell-off in just about every market. The last couple of weeks we did have some rebounding. So we're going to continue to look and monitor the Dow Jones. We really want to keep paying attention to this. So aligning ourselves with commercial interest really put us at an advantage, I believe, to see, to be able to participate with this market bounce that happened. So we've got our daily time frame loaded up, and we've just been following commercials for the last several weeks. And when we break up over this 80% mark and into 100 territory, they're setting new highs on a 6-month index. And also true to that is on the 3-year index, same period of time, 3-year index, so 3 years worth of data. The last time that they were this bullish on a 3-year index with the 1-year amount of data that we're looking at here was back in this territory. So we were hip to this. We noticed that there was a tremendous amount of net long positions being held by commercial interest, quite a hike from, and with the market selling off this much, this looks really appealing for commercial interest. So as we always do, we like to see, or we think that commercial interest likes to see, is diminishing or relatively low open interest. Comms are bullish. We're in that oversold territory on WPR, and the market sentiment is either diminishing or relatively low. So this is the lowest that market sentiment has been on this chart for the last year. So this area already looks like a really appealing area to establish a long position. And commercial interest, if we aligned ourselves with them, it wasn't a bad idea. So we'll get into more of the specifics or a more detailed look at the charts this week and drill down into the individual commodities to do some price action analysis. But so far as commercial interest goes, we got to keep watching the Dow Jones, because something's going on here. These guys are still holding net long positions, even with a little bit of the retrace that happened this week, which was, I would say, not really that drastic, all things considered. So euro dollar, what are we looking at here? Quite a bit of shift in the euro dollar. Up at 166, so can we take a look at that just real quick? And this is a considerable market shift on the euro dollar here. Let's just take a quick peek at the chart on the daily time frame. Oh, well, yeah, that probably would go without saying here. That in this area, when we push from, you know, zero, setting a relative low in extreme bearish territory, and the quick shift in sentiment, boy, they got a head start. They got a head start, it seems. Well, this shifted dramatically, so they're still holding a very positive outlook on the euro dollar. Not quite in that oversold territory. Doesn't look like open interest helps us out too much on the euro dollar. But commercial interest was, you know, as a leading indicator, looked pretty good when they started crossing up above the 80% territory. So that looked promising. Looks like that happened quite quickly. So if you're paying attention to fundamentals, maybe you got on the right side of the trade back here, but they weren't optimistic back in this territory. It looked like they were you know, holding a negative outlook, and then this thing shifted on a dime. So they are holding net long here, and they continue to hold net long. So something to watch. We'll keep that on the radar for the upcoming week. Canadian dollar still looked pretty promising. Still looked pretty promising this week, even though there was a little bit of selling off going on. So holding a very positive outlook over the last 5 weeks and setting new highs on the net long positions. So Canadian dollar is still something to watch. And can we just take a quick peek at the chart? And the Canadian dollar here. Very positive territory up in here. These are new highs on the 6-month index. Not quite pushing it on the 3-year index. A lot more data to work with, but you know, I mean, there's our high for the last year's worth of data. We're just about up at the same territory. So quite a bit of selling off going on, nice bounce, and this did not retrace like a lot of the other currencies. So I'm of the mind of saying that you know, commercial interest has got this right, and maybe the Canadian dollar can trek higher a little bit. So this is where we initially broke into extreme positive territory, and it probably wasn't a bad idea to be aligned with commercial interest when all the selling, when all the shooting started here. So it looked pretty good. So this was a pretty good indication that, you know, WPR oversold, market sentiment really, really low. It's what we like to see. Diminishing open interest. I mean, open interest is relatively low here, and this was the time to get into the market. So I think it looks like they think that this might go quite a bit higher. There's something to keep monitoring is the Canadian dollar. We're going to keep that on the upcoming list for the week. Silver is still looking really bullish from the standpoint of commercial interest. Looking really good. About a 2-month period, and when comms are bullish, this bullish on silver, I gotta think that this is really good news. No, it appeared to be good news. I think we reported this on the last CoT report, is that when they started getting bullish back here, this was a really good indication, because they hardly ever hold long positions, you know, on the 3-year index or on the 6-month index. I mean, they got, you know, for 2 weeks they got a little bit bullish here, and there was quite a bit of price action movement to the upside. So we weren't wrong to align ourselves with them back there, and we weren't wrong to align ourselves when they were getting extremely bearish in this territory, because I felt like, you know, this was a market top. So if you get out on the silver, congratulations, that was quite a hike, and not a lot of retracing going on. So this still looks promising. They're still holding their long position. So we'll see what develops over the next couple of weeks. But if you got into this trade when they broke bullish, you're in good business here. Corn, we said to pay attention. Doesn't look like much has changed. Looks like they're still holding pretty optimistic on corn, and more so this week than they were last week. So just took a quick peek at corn. Let's go Z. Let's go ZZ. So not quite the movement that we were looking for just yet, but will there be some opportunities to get into corn in the coming weeks? So this is relatively low value considering comms are as bullish as they are. So corn could see some upside in the coming weeks. What we would like to see is bullish comms, diminishing or relatively low open interest, which is pretty low considering. Your relative high is up here around 100,000 or 1,000, in the thousands contracts here. So we're down to 441,000 versus 900,000. So this is relatively low to begin with. So this looks like this could have the potential to turn around, diminishing or a relatively low market sentiment with WPR in the oversold and open interest relatively low. Comms are bullish. This looks pretty good. 3-year index up just about brushing that 80% mark. So that is that bodes well for corn, I think. Oats, we were pretty hip to this. We did a chart on oats last week, and com's still looking bullish on in agriculture. So they're pretty optimistic on this. And can we pull up a seasonal chart? Let's pull up the seasonal chart on oats just to see if this looks like something that could materialize, or do we have a case for we were relatively low here, and nothing really compelling looking like Oats is approaching kind of a rally point, but we're well below the average on Oats, and that bodes pretty well. So some years that are traveling below the average look like they retraced or corrected a little bit, but we're really low on Oats. So we'll have to monitor that. So com's really bullish on the Oats, but com's really bullish on the Oats. We were pretty hip to this. We noticed that there was a change in sentiment, and we wanted to be a part of this. And I think in our video we said wait for this to come down, because we were up around this range. We said wait for this to come down a little bit, and then get your bids in. And it didn't disappoint. This looked like a pretty good chart. Market sentiment was relatively low here. Didn't quite get into that oversold territory. Well, we did get a little bit into that oversold territory down here, so that was a pretty good indication. Open interest kind of diminishing or declining. Relative highs is about 6,000, and we're sitting around the 2,000 range. So this was a good chart. And on top of that, it just looked like a nice solid swing pivot for maybe quite possibly a long-term low. So we got the higher low, the lower low, and then we got this technical test, and we broke out. So it's look good. We're going to continue to watch that, especially for a turn, but right now looking pretty bullish. Palladium, still looking a little bullish. If you got deep pockets and you want to play this one, their comms are consistently bullish on this. Coming down a little bit from last week's high, but still holding net long. So what does the Palladium chart look like? And I'm pretty sure we put this in the CoT indicator here. Yeah, we did on TOS. Yeah. So comms working bullish. Back in this territory. And this was a pretty good indication, especially with this, the 6-month index rising quite considerably with all this selling going off. So we are already at relative lows, considering for the year. And this looks really appealing. So this did not retrace much just yet, but comp's still holding a very positive outlook on this. I mean, when is this going to turn? Well, I don't know just yet. Maybe we'll do another video on Palladium to see if we can align ourselves with this trade. So right now, looking good. Right now, looking good. Still bullish. A chart to watch. So, you know, up over that 618, hanging around in that 50% correction range, and it's looking good. So if we're following this as a leading indicator, comp's bullish. One more time, diminishing or relatively low open interest. We are up in that overbought territory too, huh? Oh, apologies. We're looking at the retrace here. We are looking at the retrace. So, and that's quite interesting, isn't it? So this is a little different look than we usually see. They think this is going to the moon or what? So negative outlook down here. Negative outlook down here shifted their sentiment. And as we approach the market top, they're still getting more bullish. Even though we had this dramatic sell-off, still holding net long contracts on Palladium. They think this is going up much higher. Quite possibly. Because they're still holding, I mean, until if they're holding net long positions back up in here, right now, they might be at a loss. So kind of a funky chart going on here. Kind of a funky chart in terms of commercial interest. WPR was down in that oversold range. That was probably one of our indicators. We like to see, you know, bullish comms, WPR in the oversold range, and relatively low or diminishing open interest. This chart is just a little bit funky. So I have to wonder where comms are going and if they're bleeding. If, you know, producers and merchants are bleeding money here by still holding net long positions with this dramatic, you know, retrace. And they're just not giving up on it. They are not giving up on this chart. So we do like to see both of these in bullish territory. Boy, did they not expect this? Because they might be at a loss here. Or maybe closing out some of their contracts near this high, but okay, let's move on. Funny chart to work with, but comms are still bullish. So oversold, overbought territory. So something to watch up in this range. We know the gold did a little bit better this week too. Let's get back to it. Platinum in the same boat. Still something to watch in the upcoming week. So platinum, did they come down a bit? No, they're up. They're up on platinum. Haven't looked at the platinum chart, but it looked good. It looked good as a leading indicator when they're breaking into, on the 6-month index at least, into extremely positive territory with diminishing or relatively low open interest, WPR in the oversold range, and market sentiment moving down. So with this excessive amount of price action coming out of the bottom of this channel that we're working with, this was a good place to buy if we aligned ourselves with it. So platinum, something to watch in the upcoming weeks. Comp's still holding pretty bullish. Gold, same difference. We saw a shift in sentiment within the last 6 or 7 weeks, and even though we did a video and he said I probably wasn't going to play this chart, the lower time frames told us that the trend that was happening up in here, the correction to this, this peak and this high, didn't look very strong, and it broke out. Just find some support along this area, and comms in the 6-month index getting really bullish, so that bodes well for gold in both cases. Deeper pockets here, but they weren't wrong, and it wasn't wrong to be aligned on this side of the trade for the last couple of months when comms were getting bullish on the 6-month index, and open interest is, it doesn't help us in this territory, so we like to see them together. Market sentiment was blazing up in here, so there was a little bit of correction. We saw the aggressiveness in the 6-month. something we've talked about before. And then again in this territory here, comms holding quite a bit more optimistic, and they weren't, so here's the 20 range, not very optimistic in this area, but now as the market drops down, considerably more optimistic in the on the 6-month index. Open interest relatively low, WPR oversold, and market sentiment doesn't really help us out that much. So something to maintain is the look on gold, because they're even more bullish this week with net long positions than they have been on a 6-month index. It's not quite set new highs at 93%. Could it be the highest on the last 6 months? It is the highest in the last 6 months, but we haven't gotten up to 100%. So, but up over 80, holding highs. Well, look at this 3-year index. I mean, I think they were getting killed on this, on the 3-year. All right, let's get moving. Soybean oil, bullish territory. Same thing with the US dollar index. We saw both of those this week. Dollar index rebounding. A lot of the other currencies selling off, like the Euro FX. Soybean oil. So let's just look at ZO real quick, because we haven't in a long time. What's the data say? The data says that they're feeling a lot more positive about these numbers. And you can see this inverse correlation happening. You can see this. So I don't know. We have read some posts, if you will, from journalists trying to discredit the quality of this indicator and saying, why would commercial interests want to show you, the public, their ace card here? But look at the correlation going. These numbers are not based on anything on this chart, not on moving averages or any of the data that is presented from the actual chart itself. This is commercial interest only. So this report is, I wouldn't say detached from the chart, but whatever's happening on the chart isn't a reflection of where this data comes from. Okay? Right. So, Williams percentage, WPR, overbought territory, open interest is blazing. Comms are holding a bearish outlook on soybean oil. Market sentiment is extremely high. This is the time to get out of the trade. Market sentiment extremely high. Think short. When it's low, think rally. And looking at the beginning of the 2020 year, the chart couldn't be a more perfect indicator or indication that the shift in market sentiment is just about to occur at this peak. So we've got a spike in price action. Comms are not optimistic up in here with the last year of data. This all aligns perfectly. So now what do we have? Shifting sentiment. Prices dropping down. Commercial interest is getting quite a bit more interested in price at these levels, and now they're holding a bullish outlook above the 80% mark. What's this going to do? Well, I'll tell you what it's probably going to do. So we're probably going to see a shift in sentiment as price decides to travel up and retrace here. Soybean oil, something to watch. This looks like a really good chart to play. How much can it retrace? We don't know. Well, it's not, from the low, from the swing low to the swing high, and this is probably above the 50% range or so. I think comms think that this is going the other direction. What we would like to see, bullish comms, open interest is diminishing a little bit. We're in the lower half. WPR in this overbought territory, but will it get down this far to give us an indication that we want to get on the side of the trade? I will drill down your lower time frames and see if you can find a really good opportunity to get into this trade. And we're going to do a video on soybean oil because I like this chart. Moving along. let's go. We're going to keep it on the upcoming week. Dollar index we're going to continue to monitor. Live cattle, a little bit of shift here. We've done a couple of videos on live cattle, but we have not been back into this trade. Well, they've come down a little bit. They have come down a little bit. So we haven't been monitoring live cattle. Oh boy, look at that sell-off, huh? So, a bullish back in this area. Bullish back in this area, that was the time to be a buyer. Now as we've retraced a little bit, not as bullish, but still in extreme territory. So again, we see that inverse correlation, right? Market approaches the top, they're not very optimistic, and they're holding underneath that 20% range. And so we've got bearish territory. Open interest really high. It's time to think about getting out of the pool. Market sentiment's really high. We want to get out of here. You know, we don't want to be holding long positions up here. And there's your retrace. So bullish, and we get some nice price movement. And to put this in relative terms, that's a 20 point hike from bullish to retrace. What's going to happen in the coming weeks? Couldn't tell you. Bullish relatively low. We're bullish up in here. Open interest is damn near bottoming out. We didn't want to be in this trade any longer than this with WPR up in this area. And open interest moving down. We like to see both of these things together. Open interest relatively low, bullish comms. So where is this going? Where is this going? Because this is really low. And we've got the same business going on with market sentiment here. It's really low. So we think rally when we're down this far. We're thinking rally in these territories. We're thinking rally when comms are bullish on the 3-year index. So this was, a good alignment, especially with WPR in the oversold territory. Something to watch. We'll keep it on the radar, but still holding a positive outlook. In the coming weeks, I gotta think that they think that this is going higher. Is it? So as price action moves up, comms getting less optimistic, closing out their net long positions and holding their net short positions. Or were they wrong? No. Could we align ourselves with the proper side of the trade here? Absolutely, with these extremes. So that's what we're looking for, is the extremes. Something to watch. Probably not going to play this chart, and this is just as bullish as they are. Still holding that long positions. Where's this chart going to? Okay, moving on. Boy, this chart's getting... So we're going to do the top half and the bottom half, just to keep this speeding along. I don't play notes very often. I mean, that's, if you want to drill down into, notes and take a look at that, go ahead. It's just something I haven't really gotten around to yet. But, a shift in sentiment over the last 4 weeks on the 5-year note. And a very negative outlook on the 10-year note. So we should put this on the radar on the 10-year note. That's probably down here somewhere. So we'll keep that. We had that set up for the next couple of weeks, but let's put that in the upcoming week because that looks pretty good. So now we're in this mid-range territory, which is I usually just kind of stay away from the mid-range territory unless it's looking something like this on the NASDAQ, which was very bearish or negative territory, and then we're moving up into, on the 6-month index, that's quite a hike. Percentage base-wise, we're about 80%. So keep that on the list. Obviously, we're always watching the S&P here. Well, it looks like this list is pretty stacked, folks. It's pretty stacked. So crude, quite a hike today. quite a rally this Friday, and I got to think that a lot of it has to do with you know, the whole Trump meeting with OPEC or whatever it was, and I think today, well, it might have happened already, that the Saudis and the Russians were going to get together and have a conversation. But so far as crude's going, it's up at 29. It's up at 29, and comms we're holding about the mid-range. But they had already broke into bullish territory on the 6-month index back here for a couple of weeks. So still holding their net long positions up in this area, and it was a nice bounce. Can it maintain it? It's possible, but there's a lot of business going on right now with crude. You chasing this higher? It's a nice bounce. It's about time that crude bounced a little bit. We're down off the highs around 70, down to, you know, in the $20 range. So if you want to call it market bottom, yeah, you go ahead. Go ahead. You probably won't be wrong. And if you are wrong, nobody's probably going to blame you for calling a market bottom here. But we'll see what happens in the coming weeks, and I'm going to have to check fundamentals, because folks were all over this just based on the mere fact that Trump was meeting with oil production leaders or whatever. Wasn't hip to it, but that looked like a nice. We drilled down to the lower time frames, and we got a nice break going in here. So if you're a breakout trader, you were alongside of the trade. So we'll keep crude on the block here. Australian dollar doesn't look like it's looking that great. Not as bullish as it was about 5 weeks ago. So we did do this chart, right? We did do this chart. Not a tremendous amount of retrace happening on the Australian dollar just yet, but where our columns, yeah, below. I mean, they're, you know, kind of in this mid-range. Maybe, you know, they're not at extremes like they were, you know, in this territory for a couple of weeks. And if you were aligned with that, it looked pretty good. So not nearly as optimistic, but not nearly as, you know, pessimistic either, or negative as they were back here. And if we aligned ourselves with that, you know, we aligned ourselves here with this 6-month index. So, well, you probably made out handsomely. Lots been going on in the market. A lot has been going on in the market. So hard to follow them all. I mean, I typically only like to play at least 1 or 2 charts a week. So I mean, there's plenty to pick from. So. Japanese yen coming down 5 weeks prior into bearish territory. So just about everything on the bottom half of this chart is bearish territory. Euro FX, we just did a video on that. If you want to see our take on that, you can go ahead. So this is a really strong downtrend as it is, and commercials are lined up with the right side here. 10-year notes, we just looked at that. That's looking pretty bearish. Setting new lows, so it might just, you know, what's that, our ZT here? There's the yen. We'll just take another quick peek. Not as optimistic up in here, so you're looking to get on the right side of the trade here. Comps, you know, breaking into bearish territory. We're bearish back here, but there wasn't nearly as much violence, and you could have made some good money until they broke into positive territory. This was the time to get into the trade, and I like this, right? So here's this, you know, so-called value high area. So this is where we meet some, you know, some resistance, and they're breaking bullish for a couple of weeks, and lo and behold, price action shifts to the upside. So could we have a case for a little bit of a retrace here, and can we be on the money? I think I might play notes this week. I think notes have got to be on the radar with comms holding this bearish outlook. We like to see this diminish. So this jives with it, you know, diminishing open interest, WPR in the overbought territory, and market sentiment really high. So this could be a nice couple of weeks hold. Watch your so-called fundamentals, but the chart and commercial interest is telling us that. And look at the 3-year index, just hovering around the 20% range. Yeah. Can this come down? Oh, it looks like it. I think so. So here's the rest of it. British pound, haven't been paying attention to the British pound very much, but it looks like they're lifting their head just a little bit with ever since. Oh, wow. I mean, look at all that red. They just don't look. It just doesn't look good for the British pound. It doesn't look good for a lot of the currencies outside of maybe the Japanese yen and maybe Australian dollar. So we had identified a pattern up in here in the lower time frames that looked a lot like a very complex head and shoulder pattern, and we hit target and then we exceeded target. So coming off the bottom, very negative outlook for some time, finally breaking away from that. Very oversold, diminishing a relatively low open interest, and market sentiment's really low. So not a bad time for a rally, but I mean, not a chart I really want to play right now. I say that, but we might look at the lower time frames and then something might change. So we'll see if we put out a video for this one. Let's just move along. Japanese yen coming down. Japanese yen and natural gas continuing to get shelled at 1.5 at $1.50. Continuing to get destroyed there. Soybeans themselves not looking wonderful in terms of commercial interest. Is that a chart we want to play? Is that the soybeans? Yeah, we were looking at that. Bearish territory. Not very optimistic. The chart looks like it's a telltale sign here. Overbought. Open interest is relatively about middle ground here. Bearish territory. This could come down. It seems like it could come down. Setting a new low. Where's your 1-year low? It's way down here. We'll see in a developing chart, but this looks like a relatively strong downtrend for the most part. A nice opportunity in this excess amount of trading area on the 1.25 coefficient, and then now we're sitting right on top of that point of control. Looks like a pretty good point of control. So we're sitting right on top of that. We drill down into lower time frames, maybe do a video for this one, but you're on the money if you were aligned with commercial interest here. Breaking bullish, and we got some retrace. Breaking bearish, and we got some retrace. Breaking bullish, not as bullish, right? Not setting new highs, but just teetering into that extreme territory. And we got some nice movement, but then not very optimistic. So still holding short, even though we got a nice rebound. All right, folks, that's probably it. That is probably it for commercial interest today. Short and sweet. I know we're into the 40-minute range, but this is important. This is important. So many times I do these CoT reports, or I do videos, journal style, and on several occasions I've lost track of where I am in the week and which charts I should be paying attention to. The extremes is where I like to pay attention to, and when I look back on these, and then I review the chart from the previous week, I notice that if I just paid attention to the analysis, I would have been with so many charts on the right side of the trade. Not that I was on the wrong side, but I missed opportunities. But there's always another opportunity, the next week. So here it is. Here's the data. Here's the quickest look I could possibly provide for something like 40-something commodities. And this is the chart. So if you want the data, and you don't want to just refer back to the video, come and join us in Discord. We post the charts, we post the data, we post the commercial interest. If you're interested in grabbing the indicator for Thinkorswim platform, send me a direct message in the channel, and we'll see what we can do. So Discord's listed in the description. We'd love to have you by to talk some trade, talk CoT reports, talk some price action, talk some pivots, talk your fundamentals, whatever you want to do. Post your trades, and come in and just hang out. We'll be really happy to have you there. So please do the subscription thing or the like button or whatever you YouTubers do, and leave some comments. We really enjoy those. So until the next video, I hope you find yourself on the profitable side of the trade. Thank you.